Welcome to the One for the Road podcast. My name is Mr. K. Alongside me, as always, is C Squared. Tonight's topic: who's hot, who's not? Stock market sectors. C Squared and I, we're going to break down who's hot and who's not as applies to the U.S. market sectors in the stock market. We're going to analyze a couple sectors tonight. We thought we'd look at financials, Bitcoin, precious metals, tech, communications, and energy. Along the way, we'll probably touch on some of our favorite companies.
Ironically enough, we will get into my thoughts on precious metals, having been in the past a longer term investor. And it kind of ties in as the inverse relationship to where the market is currently at and going. Quite the haircut over the past month.
Yes, last
And
week was woo.
the little brutal was wondering, and you keep asking yourself, is it over?
I
And
don't think so.
today may have been an indicator that the bloodletting is taking a pause for a while, and although that kind of happened the week before last, and then you got blasted last week, so it's hard to tell um, uh, where things are going. But I will say that your things like the Mag 7 have taken a pretty hefty haircut, and so from that aspect, uh, is it a buying opportunity? If you found
Right,
the bottom, then it is a buying opportunity. And
right.
if you believe that that you've found a temporary bottom, it potentially is a buying opportunity. Now, how do the Trump tariffs affect
Hmm.
things? Um, Unclear. I'm not sure how the tariffs in particularly impact um, things that are not directly imported or that are only partially imported. Is it like what they would consider a VAT tax? Do these tariffs essentially constitute the US's version of a VAT tax, which is, each one of the components is charged a tax related to where how it was manufactured, and so
Right.
um, I have not delved down into that, but obviously it has spooked Wall Street a little bit,
Yes.
and among other things.
Yeah, for the last couple months, it's really spooked Wall Street. And there, any time the topic of tariffs come up or the threat of tariffs come up, the market has reacted negatively to the point where they're just building it in. And you know, to your last point, when that happens to me, that's buying opportunity because you're reacting to emotion and things that haven't even happened.
Yep. Yeah, absolutely. And the question becomes is, again, like a VAT tax, what is the actual impact of this? So,
Right.
okay, if you're saying, you brought up the energy sector, John, if you're saying it's foreign imported oil, okay, I get it. That's obviously going to be hammered because if you're applying a direct tariff to that product, and it's basically being pumped from somewhere else, that's a pretty simple equation.
Right. Right. Right.
Which
Right.
this is being pumped outside from outside of the country, and the bottom line is we're putting a tariff on there. When you start to talk about multi-component based products, and you know these could have been, some of the parts could have been manufactured in the United States. How does this relate to, is it assembled in the United States, and what value does that bring to the scenario.
Right.
So, how many components of this iPhone, of this, server farm, essentially is manufactured outside of the
Right.
United States.
Right.
What tariffs actually apply to them, especially if the components come together as a holistic unit from many, many foreign countries, and
Right.
now it's a
Right.
different tariff rate for each component.
Right.
And so how that's an equation that needs to be figured out.
Right.
And how does this relate to software as a service or whatever? And am I now considered some tax applied to me that I have a data center in Dallas, that I'm hosting my software as a service in data center in Dallas, a data center in Chicago, and a data center in Singapore? How does that
Right.
actually relate?
Yeah. Yeah.
you know?
Yeah. I mean, there's a lot of questions and nobody has any answers. So the market has reacted in just fear mode.
Yep.
So,
No, I agree. I agree.
so we're recording on March 31st. Liberation Day is coming. That's Wednesday, where Trump's going to outline specifically the tariffs. But there's been no advance word as to exactly what the tariffs are, on what, where, who they're going to be affected. And the other thing is, okay, the tariffs, let's say they start Wednesday. What does that mean for the next quarter? We won't know until the quarterly earnings are out.
Right, right, exactly.
So
And
a
you
lot of fear
know,
and unknown.
I brought this up too, and you look at back to Mag 7 companies like Nvidia, you look at this and say that they had, presumably, from what I read, substantial orders,
Right.
back orders from big players. So realistically, did somebody cancel those orders? I mean, you were riding in on that scenario, and the question is did somebody cancel those orders? Did this substantially impact their profitability on those orders? If the answer is no and no, then that screams buying opportunity, because
Right.
I have a locked in revenue stream, and I had a locked in amount of profitability that is not impacted by this currently. And so, you're looking at this and saying that, the old adage of, a rising tide floats all boats. Well, guess
Right. Right.
what? The opposite works too. A
Right.
sinking tide puts every boat on the bottom of the lake. And
Right. Right.
so the thought is that whether they deserve to be or not. And, it's like so. And that is, into the greater thought of things, the how much does liquidity of the market drive the price of any individual given stock? And
Mm-hmm.
so you're basically saying that okay, I believed this company was worth X on on my model because they had this amount of guaranteed revenue stream and this amount of guaranteed profitability, but all the liquidity went out of the market in a panic selling scenario for everybody to go into cash. And so now they are priced well below what that model said they were really worth.
Right.
And
Right.
because I had this this profitability mapped out, and nothing
Projections.
has changed there, man,
Right. Right.
except for the fact that the buyers have moved to cash, and
Right.
moved to some other safe haven. And so that's where, from a long-term investment perspective, that's where big companies make a lot of money since they're not able to, since the options market and the futures market are, such a small subset of the actual stock market, just like the stock market is a small subset of the bond market. The bottom line is that you look at those aspects and say that's where big investment firms eventually come in and can move that stock, because they will be buying little bits of that, and then at some point come in with the big kahuna and buy a
Right.
huge chunk of that after they've acquired, much many purchases of smaller proportion, not to spook the market in any way, shape, or form, because they want to get that good deal. And they're basically sitting here looking at this and saying that, why am I doing this? Because our model says this stock is now substantial after this haircut. It's substantially undervalued
Right.
based on their PE ratio, and other models that they use on the back end. So are we at that point? I don't know. The question also becomes, or is there, if this is driven by a liquidity issue, how deep is that liquidity issue?
Right.
Because you do throw that model completely out the window once, if you have a substantial global liquidity issue,
Hmm.
because everybody is selling things at fire sale prices because they want cash. And
Right.
it's no longer about what is the value of this company. It's, I want my cash and I want it now. And so at that point in time, I, the model becomes irrelevant. And, and that's when you get these longer term, huge opportunities for longer term investing. And now that, I mean, longer term investing seems like a dirty word.
To you, it is.
Hey,
Not to me. You're Mr. Short. I'm Mr. Long.
yeah, well, long term investing. That, my long term perspective is 24 to 48 hours, but
Man. Wow. Mine's like a year. Well, so let's get into one of these sectors, financials. I'll give you a little quiz. C squared financials, are they hot or not in 2025?
I would say that nothing is hot currently, however, within the last month. But I would say that, uh,
This is over the last three.
yeah, 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 yeah. So I would say that they were probably doing okay. It's possibly a company by company
Yeah.
basis on financials. But as for as a sector as a whole, I think they were doing all right. And
So they're kind of warm. So financials are up 1.83%. So they're kind of in the middle. They're just warm. Financial sector finished great. I'd say great in 2024. They were the fourth biggest sector related to performance and rate of return. They're still kind of in the middle this year. Again, I think they're about sixth or seventh out of 11 this year. Last year they were fourth. So as a whole, they're up 1.83%. I'll run down some of the big dogs in this category. It lends itself to your guess, Chris, where some are up and some are down.
yeah, yeah,
JP Morgan's up 1%. Bank of America's down 6%.
yep.
Citigroup is even Steven. Haven't, and so is Wells Fargo. There's this little known company that you're fond of that's down 7%, BlackRock.
Yeah, that's so
Heard they
much
have a
for
great
their
CEO.
methodology. Yeah, I've noticed that. For some reason, the Don seems that he's friends with him. Why, we're still quite unclear.
Right.
But and you know, you look at that. You had to bring that one up, John, in the aspect of saying that they owned a huge percentage of the market, and guess what? They are very. No, no, I would love to believe that their methodologies on running companies sucked, and I still believe that. They get into the board and they screw up companies, and they thought that that was never going to impact them because they were such a behemoth of a company and investment firm. They thought they could do anything. Um, uh, the bottom line is when you own that percentage of the market and liquidity dries up, that completely explains I'm down 6 or 7%. And
Right. I
you
mean, you're
know,
on
so it
seven.
really isn't, while I would love to indict them on their uh, uh, business operations practices because I'm not a fan. The bottom line is that they're and I will just say this: they are absolutely what would be considered an activist investor, which I believe
Right.
is quite dangerous. And
Yes.
um, so I would love to indict them on their methodology of being an activist investor, but I actually don't believe that's what's going on here. The market has gotten hammered, and they owned a huge percentage of the
Yeah,
market, and they
they
got
took a
hammered along
beating.
with it.
There's some other companies we're going to mention later that are really taking a lot worse than BlackRock. BlackRock only down 7%.
Yep.
Quick question: you're going to short them?
Yeah, we haven't opened up shorts in a while. The bottom line is that we should have opened up longer term shorts, but you know, liquidity always plays into the price of the market.
Yeah. Next, I should have known this. There is one sector within a sector within financials, insurance companies. They are doing quite well and have brought probably that whole sector up a bit. Some of the big names in the insurance company that are doing quite well. Aflac is up 6%. Allstate's up 7%. Hartford Insurance Group's up 11%. So within the financial sector, the insurance subsector has done the best. I think they're up 9% as a subsector.
Well, in most cases, I would
Currently,
just comment on the business model and not those individual stocks. In most cases, it is very profitable to sell paper, or i.e., nothing.
right, right.
Because your manufacturing costs are so low,
Yes. Really low.
really low. And
Credit card companies are also in this sector. They're kind of running even. Visa's up 8%, MasterCard's up 2%. Discover Financial Services, not Discovery, is down 8%. So pretty even there. Uh,
interesting on Discover. So doesn't Bank of America own MasterCard? I'm not
I don't think
sure of
so. They're
that.
separate stock symbols.
Well, they okay. Well, they
Back at MA.
did. They did at one time.
Yeah, not
They
anymore.
are the founder of Mastercard. So I was, it was unclear, but that's interesting that BOA is, as a stock, is getting hammered, and Visa comparatively to Mastercard is doing considerably better.
Yeah, I was a little surprised. I, full honesty, I'm a shareholder in Mastercard currently. It's done quite well. I kind of wish it was in a Visa because it did a lot better. But Mastercard's been a pretty good stock. My long term pick for that sector is Mastercard, and I do like J.P. Morgan too. But Mastercard's been a really good and solid stock. We can move to the energy sector. Quiz for Chris. Hot or not the energy sector in 2025?
2025, I haven't been paying a ton of attention with the recent tariffs. I'm thinking there is a haircut there. I bet in 2024, the energy sector was a rockin' in the free world because the bottom line, or at least over the past 24 months, the energy sector was rocking in the free world. I know because they got a lot of my money. The bottom line is that 2025, I am going to guess on that they are not doing as well as they were in the past over the past 24 months.
So it's the exact opposite. Energy is
Oh my
hot.
God.
It was not hot in 2024. The energy
How I
sector
don't know.
finished poorly in 2024. Only materials and healthcare were worse in 2024. It is number one sector in 2025. It
Really
is up 8.14%.
interesting. Well, so I probably should have looked and what is included in that. The what and I will ask you this, John, and I speculated thinking of just things like oil and stuff like that. What sector contains uranium? And so, is it the energy sector or is it the mining sector?
I think it's mining
Okay.
because, let's see. If you give me a second, the energy sector is made up of oil, gas, and consumable fuel companies and energy equipment and services companies only.
Interesting. Okay.
So that's the definition that I used, and that sector in particular has outperformed all the other sectors so
What
far in 2025.
percentage of that, and I should have asked these questions for, and maybe this is easily obtainable information, maybe it's not, but I'll just throw it out. What percentage of that are uh, U.S. based companies?
Oh,
U.S.
this is all US based. And then the energy sector is the US based energy sector. It does not factor in any other worldwide producers of gas and oil. This
Okay,
is US
so
only.
that is where
This is
that
US
is how I
only.
went awry on this.
Yep.
They
So
should
these are
have.
US companies. Got some names for you that are having some pretty good years. ExxonMobil's up 9% so far. ConocoPhillips is up 3%. Chevron is up 14%. Valero's up 7%. Phillips 66 is up 6%. So a lot of those brand name gas companies are
Yeah.
doing quite well this year, and they had a horrible time in 2024.
Well, and because I should have clarified that because I bet what amuse me. What did pull up a 2 year chart on BP, an international company, and see what they did over the past like 24 months.
I could do that. BP, there they are. Come on.
And the reason I bring that up is I was unclear about
Here it comes.
what energy sector we were discussing.
United States only.
Yeah.
BP, I've got their chart is drawing 2 year. Got 1 year.
I'll even take a 1 year.
They've been down 10% over 1 year, BP.
Really?
Yeah.
Huh. Well, I'll be.
Oh.
So that kind of proves me wrong. But um, uh, uh, from that aspect, U.S. producers under the previous regime in the United States, totally makes sense that they were getting hammered. Um, uh, and but foreign oil should have been doing, or international should have been doing a lot better. That's ironic about BP, but
Yes.
anyway, the
Last April, they were at their pretty much their high, and it's been pretty terrible since then. They hit some real bottoms in November and have come out from that pretty well, but still down 10% for the year. And that's a
interesting.
1 year chart. I was able to get a 1 year chart. There's a 5 year, but there's a, I, the service I use doesn't do 2 years.
Yeah, yeah. Let's so from that aspect, you would have thought that international oil was doing much better than domestic because of the previous regime, and it totally makes
Right,
sense with the the comment of drill baby drill
right.
locally, that the US market would be improving under the existing regime.
Well, BP, I'll tell you, since Trump got in, their chart is pretty steady rise since January.
Well, and flushing the all the ridiculous carbon credit type environmental garbage that is, now being proven to be complete and utter lies, and a global banking Ponzi scam,
Right,
and on how to create, international credits for that are spun out of nothing by you know organizations that nobody even knows who are
right.
behind these organizations, and dumping these fictitious carbon credit stuff and onto the market. So the fact that that is now being totally debunked as as a bunch of garbage, and probably makes that sector roll a little bit too.
Yeah, it's been doing quite well. Other names, Occidental, not Oxycontin. That's Warren Buffett's favorite. It's down 1%. OXY is the stock symbol. That's why everybody's like, "Oh, Oxy." No, it's
the,
Occidental, the fuel
the
manufacturer.
Ironically enough, if you give me a second, I'm not sure if you can still see me, but I can probably pull up a 2 year on BP. Let's see here. Let's add a symbol BP. There we are. British Petroleum stock, and let's see this here. Let me see, because I am using, which I have always liked, these tools, tradingview.com,
Yeah,
and
that's a good one.
that is, let's see here, BP.
I mean, year to date, BP's up 14%.
Yeah, so
So,
let's see here. Yeah, its high was $8, somewhere around $8, and that was uh oh, okay. So this is a longer chart. So yeah, that was actually before COVID. So I did not
yeah, that might have
COVID.
been a 5 year. That looks
I
sounds like
did
a
not
5 year
factor that in either.
COVID.
Well, let's see if we can go to a.
Yeah, I just did a year to date, and it's beautiful. The 1 year is not. It's like
Are
this
we?
hue.
Um, Dude, are we looking at the? I mean,
I did BP, the stock symbol BP.
yeah, I'm looking at BP too, and so, uh, hmm,
I'll show you the site. I'm getting mine quickly.
because I cannot. Now it may be down. So when was that? Why is this showing me this historic? But continue on there, John.
Sure. Some other gas supply companies, Halliburton is considered a energy sector stock. They're down 7%. Baker Hughes is up 5%. Schlumberger is up 9%. So the traditional gas companies index is up 8.45%, while equipment and services like Baker Hughes, Schlumberger, and Halliburton are only up 4.35%.
Interesting.
Uh,
Yeah, so the exploration is not doing as well as I might have thought, man.
yeah. So far, it looks like a good safe haven short term sector. I don't know how long that'll last. Uh, my long term pick for this sector is Valero. They have a tremendous track record of exceeding their earnings quarter after quarter.
Nice, man. So what else we got? Where are we with things that people care about, like the Mag 7?
That's what's next is tech. So, what do you think? Hot or not?
Well, I'm sure
Tech.
they've been getting hammered having watched the Nasdaq over the past 4 to 6 weeks. I'm sure the answer is they they just got a substantial haircut for
Yes,
2025.
they're not
Uh,
hot. Tech is
yeah.
down 12.82%. They are not hot. Uh,
Again, this could be a huge buying opportunity. I won't say for total tech, but I
Select
am I,
pieces.
I am a Nvidia fan, so
Right, right. Tech was up big in 2024. It was the second best sector in 2024. Only communications was better.
there you
Uh,
are.
yeah, in a previous podcast, we mentioned the Mag 7, how these seven stocks define the industry, tech industry in most every major market until further notice. The Mag 7 has taken quite the beating since our last podcast, which was a month ago. Did we curse them? I don't know. Every one of the Mag 7 stocks are down. You name it, they're down. Apple, Microsoft, Google, NVIDIA, Tesla. NVIDIA's down 18%. What do you think of NVIDIA? Going to come back or you're going to short them?
Again, I say these guys got orders in the pipeline, and so where were they? They were at a buck 20. They were at a buck 20 in the uh in well, hold on here now. So no, they were much higher. Hold on here. Let's see here. A buck 40. Yeah, looks like and they had even, yeah, so they were at some point. Let's see what we got here. This is January 25th. They were at a buck 52. They're now at what? A buck 8,
108.
108,
108.
dude. So it looks, so the question is that realistically, did these orders dry up because you're selling now at between a buck 52 and a buck 8, and you're selling it at 20 some odd percent discount to where you were? What changed other than the liquidity situation?
Yeah, they're getting some unwanted love. February 26th, they reported earnings and exceeded them.
Yeah,
They were exceeded earnings, I mean, the last 10 quarters.
right. So what's to say that they're not going to do this literally,
Nine.
dude, on uh last Friday they were at a buck. So somebody is buying, somebody's bottom fishing, because last Friday, John, they were at a buck 4,
Oh,
right?
wow.
So they're up $5 in the last couple of sessions here. Yeah. As a matter of fact, they were a buck four this morning. So, so
Right. Right.
somebody bought the hell out of this thing today, dude.
Right. Right.
Right?
I mean, it goes back to my initial point at the beginning of the podcast. I think it's just fear. Tech is just taking a beating. These things run in cycles too. It's like you end the year and communications and tech are up, and energy and healthcare are down at the bottom, and then the year starts and they flip. I mean, an
Yeah.
exact flip, and that might ride out about 6, 7 months. Then it'll flip again. I mean, these things run in cycles. These sectors.
Yeah. So this is ironic, dude. I am looking at a daily on this thing, and somehow they are saying that they are listing NVIDIA as down. What? Hold on here. Oh, because it got hammered. Okay, I'm seeing what's going on this chart, dude. So you could have killed it on NVIDIA today because it closed on Friday. It almost a buck ten a share. It opened this morning at a buck four and so it got hammered in overnight over the weekend. Dude, that was the play. Speaking of shorts, you could have bought an overnight short on that thing. Puts overnight at the Friday close, dude, and cleaned house on that thing at the open today. And then bang, you're back to 109 roughly, 109 by the close today, dude.
Yeah, the
So
range was
you
103 to
could have
110.
bought. That was the play of the day, play of the week from last week to this week, folks. If you'd have shorted them at the close on Friday, close your puts on at the open today and bought calls with all the money you made, you'd
Right.
have killed it.
Right.
And
Yeah. Yeah. It's a stock to definitely watch. I am confident it's going to bounce back. I mean, 9 straight quarters of exceeding earnings. They are the leader in GPUs.
yep,
Everybody's buying GPUs like crazy. I
yep.
mean, so
Well,
tariff
they
or
got
no tariff,
that
I
coming out.
still think demand's going to be high.
Yeah, yeah. So the question is that there's your liquidity play. I hate to keep harping on this, but who cashed out this morning that needed the cash or cashed out in the overnight market between Friday, a buck 10 on open at 104 and and then other players who were not liquidity strapped are like, this is stupidity, dude.
Right.
I am buying the hell out of this
Right.
thing
Right.
and
Right.
picking up 5% on the
Right.
day, 4 per
Right.
4% on the day.
He's
So
for
if
it.
you'd have bought at the open, you and sold today at the close, you know, speaking of my long-term investing strategy, if you'd have bought at the open and sold at the
Yeah.
close,
Yeah. Your
the
long-term
bottom line
strategy
is
of a
that
couple
was worth
hours.
that was worth about 4%, folks. So
Yep.
over
Yep.
4%, and
Yep.
so there you go.
Some other big names you might have heard of. Oracle is down 15%. IBM is up 10%. They are one of
No,
the few.
no loss for Oracle. No love lost for Oracle.
That's for
Having
sure.
dealt with some of their products, in
Oh,
my
yeah.
personal opinion, they pretty much ruined my sequel, and
Right. Right.
they pretty much rendered that product worthless. But that's just a personal tech opinion and much more Postgres fan. But
Right. Me too.
uh, uh, from an IBM perspective, I will say that I have not been a fan of where they've been in the last 10 years. I think all their AI stuff was premature into the marketplace. The whole Watson thing was into the marketplace. But what I will say to you is their core business, which they should have stayed in my personal opinion. They should have just kept riding the core business that they had. They decided to make their former CEO decide to make some, in my personal opinion, really bad decisions um, in selling off products and not focusing on their core business model and going down this weirdo Watson path and not essentially getting beat to the punch by things like Azure and stuff of that
ChatGPT,
and Chat GPT and
Microsoft.
all kinds of stuff like that.
Right.
Um, but what remains in place is in this is my a personal opinion on my personal experience is they have the greatest customer support model for the software titles that they run that has ever existed. And their software support model, there is always somebody on the other end of the phone with an issue that when you have an issue, and the bottom line is they have a clearly defined process that they stick to meticulously um, to resolve issues, and it is always a competent
Right.
person
Right.
that you are talking
It's very
to. And
impressive.
I have observed no other software company in my long career in software that that has anywhere close to a comparable model to what they have done. So, okay, you paid more for their software. That 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 you were if you think that that was wasted money, the bottom line is that you're not the model that you were using to determine the value of that software to your company is flawed, and a number of past employers essentially had that problem in evaluating the value of that model, because the value was that essentially this software works and this and their when it doesn't work, their model is impeccable and second to none in resolving your issue.
Right.
And
I'm pretty impressed on IBM on a lot of fronts. One is they make no bones about it. They are an enterprise company. They're not a commercial and enterprise company. No, our customers are enterprise, huge companies. That is our focus. The other thing that's helped them out tremendously is their acquisition of Red Hat. Red
yeah,
Hat is a top shelf organization, own huge market share in Linux and enterprise Linux. So
yeah,
there are millions of enterprise servers running Red Hat, and that is just a revenue stream for IBM. The other thing I'll conclude with the other thing I admire IBM about is they have a unbelievable consulting services. So
yep,
when enterprises struggle to create solutions and business solutions, they can lean on IBM to get real good help and getting that solution up and running and generating revenue.
yep, yep.
But they've got a lot. IBM is a lot bigger than people think and a lot more faceted. There's a lot of many facets to IBM that people don't know about. And
Yeah.
if you're a shareholder, you're loving life now. You're up 10%.
I did think it was. from a non-stockholder perspective, which the up 10% is fairly impressive. That's great. From a non-shareholder perspective, I did think it was bad play that they sold off the development rights to a lot of their software because I think there were some potential good things happening within their organization. But, maybe there was a financial reason for that. I know they do not currently own their Commerce Suite product anymore,
Right.
and
Or the
I thought,
portal.
yeah, or the portal or anything like that, and maybe not even DB2. But uh, you know, who knows how those business deals were structured? Obviously, when you're coming off the ground from the Watson, the decade Watson disaster, that so somebody is now finding some value there, and there was a lot of value. And if they would
Right.
not have bet all their chips on one hand, they would have never suffered the beating that they did.
Yeah, and they've done this before. I mean, they and other companies have done this. They were out front, they were there, and just nothing happened. And here comes Chat GPT. Bye bye.
Right, right. Exactly. And they put so much money in to restructure their organization, and again, um, that's a gamble, and you're taking your your a bird in the hand is worth two in the bush. You had the bird in your hand, and
Right.
you set it free to get the two in the bush. Guess what? It turned out to be a sticker bush, boys and
Right.
girls,
Yeah. Yeah.
and
So,
you got hammered appropriately.
yeah.
And
Yeah. Despite all this, I'm pretty optimistic about tech. And again, even if it has a bad 2025, it'll probably have a string of years starting in 2026 where it'll be hot. These companies aren't going away. People are spending billions of dollars. They're making billions of dollars. My long term pick for this sector is Microsoft. I think Azure and their AI advances are going to create huge revenue streams for them. And beyond that, they're third in the gaming market with the Xbox. Moving on.
I had to say, shifting since I've been wrong about a number of my sector picks on just using common sense to actually make that those projections, which guess what, folks, common sense sometimes doesn't get you anywhere.
Right. Yeah. Yeah. Yeah.
But the bottom line is that you talk about Xbox. I was laughing saying the recent problems with the Trump administration getting hacked on their Signal platform, which you didn't know that those type of products were dangerous.
Right.
Wow. But
Right.
I was going to say next they can move to some of the tricks that the Obama Clinton regime used, where they were having group chats on the Xbox.
Right.
So
Right.
that'll teach you
A safe platform.
a
The
safe
next sector
platform.
is communications. What do you think? Hot or not in 2025?
Communications. I would say that eventually they will be hot again. I will say that again. It's hard to tell right now because the market is just. We're talking about the market just getting hammered. Um,
It's only a
but
3 month
I,
sample.
I will say that I think that communications absolutely, just like tech, where you were talking about, you know, Azure, cloud based solutions, is will eventually be hot this year.
Yeah, so they're down now. I think eventually they'll be hot. They were red hot last year. They were the number one sector in 2024. Communications is down 6.64%.
I
Not
don't
as bad
think,
as tech,
yep.
but
I
they
don't
were
think any of
fantastic
that
last year.
stuff is going away, John. I
Right,
think they're
right,
making
right. Tech isn't
substantial
going away.
advancements in those sectors, and people are trying to do. Nothing has changed about I want to do more with less, and the way that that actually works. That is the premise of AI. Not that I am this huge supporting fan of AI. I think there is some overblown optimism there, but the underlying core premise of I want to do more with less is is not going away, and that's 100% valid. And how does that work? That works by I'm engaging my customer and performing sales online opposed to operating a retail
Right,
based operation. And guess what? That model is not changing anytime soon.
right,
It's
right.
only accelerating.
And again, we're only 3 months into 2025. This is the trend so far. Will these stand? Who knows? But probably not. And to your point, the Googles, the Microsofts of the world, they're not going away anytime soon. Some of the communications, Google, believe it or not, is considered in the communications sector. They're down 12%. Fox is up 10%. Charter Communications, who run a lot of cable companies, are up 7%. AT&T is up 23%.
What's going on over there?
Yeah,
Who
Meta
knows?
is down 4%. Netflix is up 4%. So some of the big dogs in the communications sector, as defined by the S&P.
So the question is AT&T up on something that they have done and adds value, or
Right.
are people bottom feeding off of the fact that
Well,
they
they
were
are very inexpensive despite their 23%
right?
rise. I think they're in the
Exactly, dude.
30s.
Yeah, yeah. So the bottom
Uh,
line is are these people bottom feeding off
right.
for and maybe that's a little bit what's going on with IBM too, is that these people are bottom feeding off of the fact that this thing, again, back to PE, that how could you possibly, you're so cheap compared to your PE ratio, how could this possibly not go well? And
Right. Right. I mean, they're trading at $28.28, AT&T.
yeah, yeah,
So
yeah.
to be up 20%, I mean, what, you're up 5, $6?
Yeah, right, right. Yep, right.
Let me just check their earnings really quick. If they blew away the doors in their last quarterly earnings, I'm just curious. Yeah, they exceeded earnings. They reported earnings on January 27th. They exceeded earnings. They've exceeded earnings the last 2 quarters. Their next earnings statement's April 23rd. We shall see. That'll be here before we know it.
Yep. Yes. No.
Got two more sectors. That's it. Bitcoin, hot or not?
Ooh. Um, uh, you're gonna have to give me a second. I'm going to check where that thing. Obviously, it's not been. What is it? Bitcoin 82,630 at the close, dude. So, um, I can remember within the last 18 months that being down at 20 in the $20,000 range, dude. Within the last 18 to 24 months, Bitcoin was down in the $20,000 range. So you're up hundreds of percent. And since then, uh, that that's a lot of money for a Bitcoin, in my personal
Oh
opinion.
yeah,
That is a ton of money. The the thought of it is that you'll have gold at record highs. Do you consider electronic currency a gold equivalent?
no,
And I personally do not. That is a personal opinion. It is not a gold equivalent, and so wow, that's a lot of money. I would I am saying that Bitcoin, in my if the economy goes the way I think it's going to go, that's overvalued and it's coming down. And
no, it's come down
if
quite a bit
you
this year.
if you say that inflation is on the so what I will say about the cryptocurrencies is I believe they are directly and tied to inflation. And so if you believe we are at the top of the inflation model here, and for domestic, let's say for domestic products, let's not factor in all these tariffs and stuff like that. Let's say if you are at the top of the domestic inflation model, Bitcoin and that would be going at best case scenario be stable and going down. If you see substantial inflation, yes, Bitcoin is going to go up. So that is my perspective on that. Why? And I know maybe we'll get into the mining sector, but Bitcoin and gold and are seem somewhat correlated. Um, why is gold so high? Because there is fear and panic related to some of the financial sectors and currencies and and global currencies. So the bottom line is that if you see the stability of some of those currencies and you see a deflationary trend in domestic products, I think gold may be taking a bit of a haircut and Bitcoin may be taking a bit of a haircut.
Right.
And
So
that's
go ahead.
just my two
Sorry.
cents. If you see continued inflation, guess what, folks? Everything's going up. And
Right, right,
close your eyes and throw a dart
right,
at the
right.
dartboard because everything's going up.
Yeah. So Bitcoin's down 16%. It is not hot. It was hot to your point. It was red hot in 2024. The other thing that's remarkable about Bitcoin from Jan 1 to Jan 30th was just a straight up arrow. It was
Yep.
great. Since Jan 30, it's been a nosedive. I
Yep.
had thought with Trump, and again, we're 3 months in, and we're 3 months into the Trump administration. I had thought that he was going to be a very, what's called Bitcoin friendly president, and that the returns on Bitcoin were going to be high. I think it's a bit speculative. You mentioned something earlier about what you think Bitcoin's tied to. Ed Dowd said Bitcoin is 98% correlated to the NASDAQ. So goes tech, so goes Bitcoin. And that's been almost dead on. They're both down about 16%.
I like Ed, and Ed says you are heading for a if I read what he is saying right, that you are heading for a deflationary recession in the near future. So the bottom line is that will bake out because I never said that the Nasdaq was going to rocket. I am much so. It, ironically enough, on this is my perspective on the market for the next year. If Ed is right, and Ed seems to be a super smart guy, and if Ed is right, and you do have a deflationary recession, This is where you separate on Wall Street the men from the
Oh,
boys.
yes.
Because what you are going to get is, forget the sectors, it amounts to, does NVIDIA have a bunch of orders and they're
Right.
going to now separate themselves from the pack? You know, or are you going to see that are these the fundamentals of these
Right.
companies, of individual companies, now become um, far more relevant than
Yes.
they have been in the past? Close my eyes because we had substantial inflation. Close my eyes and throw a dartboard at the throw a dart at the dartboard, and guess what? I'm going to pick a win. I'm a genius. I'm going to pick
Mhm.
a winner.
Mhm.
And the bottom line is that I think this is not going to be the year for that. It
No,
really is
no,
going to be.
it's gonna be a big rocky. The
Yeah,
other thing you know, it's a marathon, not a sprint. So Trump's got 4 years. The
yeah.
first year is going to be rocky, but if some of his plans take hold, it it can really be quite productive long term. I think,
Well, I
and I
think
think
it's
the
going to be
returns are going
very
to show it.
productive long term because I will tell you this, too, completely unrelated to the stock market. I have looked at real estate in certain cities, certain southern cities, just about potentially seeing what the housing prices were, and I have seen things like people buying houses for $350,000 in the within the last 5 years, and having these on the market for 950 today. There is no kitchen or bathroom remodel that you could have done
Oh,
to
right,
make
right, right. To warrant
to
that,
to get $600,000
right,
in appreciation on
right,
this house, man. You know, so what does this say? This is a bunch of speculators in
right.
there looking for the next greater fool to buy this thing from them for for 2 to 300% markup on these properties, man. And the
Right.
bottom line is, if you are not checking, folks, that on what the last sale price, when the last sale of this real estate was, and what the last sale price of this real estate was, you are foolish. And
Right.
because the bottom line, again, you could have remodeled every bathroom in this place and put, you know, tile and granite countertops in this kitchen, and somehow that does not equal a
Right.
six
600.
hundred thousand dollar markup on a
Exactly.
$350,000 house.
Right.
So
Right.
it is what it is.
Yeah. All right. Last sector is precious metals. What do you think? Hot or not?
Again, wow, super duper run, man. Super duper run over the past 6 months. Shocking run over the past 6 months, man. Frigging what, what what's gold up over the last year? 100%, 80,
Yeah.
80 to 90%.
Yeah. I had a chart out.
Uh, Shocking. And so, what is gold, dude? What is gold? Gold has very limited industrial value, dude. It is a gauge of fear, and the
Yeah.
fact that you have had
Yep.
inflation and oddities in the global banking system say that fear is at a premium. So, do you expect continued fear in the global financial system? And do you expect hyperinflation? because that's the makeup of fear in the panic price of that.
Yes,
So the
yes,
bottom line
yes.
is, do you expect to have continued fear in the global banking system, and do you expect to have continued inflation? Ed Dow is saying no about the inflation. I don't. It's hard to um, uh,
Predict.
determine what's underneath the banking system.
Right.
And boy, 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 it's frightening to start turning over those rocks and seeing what
Yes.
critters
Yes.
crawl out from
Yes.
underneath the financial system. And due to some of the stuff that they found with USAID and a
Oh
bunch of other
God.
things, where money is just flowing around the globe,
Yeah.
um, and not being traced. Guess what,
Right.
folks? That goes back to the cryptocurrency with
Sam.
say yeah, Sam Bankman Fried or whatever his name
Yep.
was,
Yep. You got it
and
right.
all this other
Yes.
and
It's
and
fraud.
and and I will say, folks, in my personal opinion, and in some past factual based findings, that goes back to much bigger banking institutions than old Sam and
Right.
and stuff like
Yep.
that. So the question is what happens when I start turning over these rocks? And gold is the indicator for the current price of gold is the indicator for, boy, you could find some real ugly things under these rocks, man.
Right.
And the guys kind of saying the same thing at what is the Euro Dollar University out on YouTube. I watch them on occasion. Those guys are pretty good, and
Mm.
saying, yeah, there could be some super ugly things. So again, this is I would say you can't go wrong with some physical gold. Why? Because there's no counterparty risk to that. Unlike a cryptocurrency, there is no counterparty risk to having some gold in hand. The question is it awful high? Yes. And the other question is that nothing happens in the banking sector and inflation, it becomes much tamer, you're going to take a haircut from the current price because
Yeah.
it
Yeah.
is a record high. Yeah.
Yeah.
So
Precious metals are up 16%. This is the hottest sector so far.
yeah, yes.
Gold is just going crazy. Started at about 2 grand an ounce. Now it's at 3 grand an ounce.
Well, we
Uh,
could talk about the other aspects of the mining sector real quick, which are um, if the market takes a little bit of a breather and there is a recession, then industrial metals get hammered. Copper and to some aspects silver and stuff like that, they get hammered, man. But where's your why? This again goes back to just like it's going to be a individual pickers markets. Forget the mining sector. If there is a recession, gold's probably getting hammered, silver's probably getting hammered, copper's probably getting hammered. What about uranium? The
yeah.
bottom line is, I don't think that's getting hammered. I think that is so, in a crazy speculation, the bottom line is that the bigger safe haven than gold? And
Right. Right.
because you know what, dude, everybody needs energy. The energy sector needs to, and they are now talking about building more nuclear plants all over the world. So
Yes.
the bottom line is you look at gold and say this is the fear hedge, but really
Right.
the bigger hedge may be I want to own uranium,
Right.
and because I
Right.
know that is in either way you flip this coin, that's still a winner,
Right.
and
Right. Right.
That's kind of my 2 cents on the
And some of
mic.
those miners have done. I didn't get into miners as a subsector. The precious metals index that I was looking at was just gold, silver, platinum, and palladium alone. If you invested in those, you're up 16%.
Yeah,
Uh,
yeah,
but
absolutely.
yeah, there is a subsector of miners and
The
stuff like.
other the other aspect of that, John, is on the bigger thing, like lithium mining.
Oh yes,
Bottom line is that that obviously has been uh, in my thought specific uh, players in that market have probably been red hot
right.
over the past 5 years. The thought is that ready to turn down because you know what, and lithium ion batteries are stuck, dude. They're stuck in where in in their technological value. And now they're talking about sodium ion batteries,
Yeah,
maybe.
that's true.
And salt, I gotta say, folks, salt is somewhat plentiful.
Yes,
I
yes. The
I
last time
threw
we
it,
checked.
yeah, I threw it on my sidewalk many times over the winter here in the Midwest, dude. There's plentiful, man. So the bottom line becomes is this in fact a top for those folks because that is a
Right,
battery technology has not been proven to be that great, and or at least they're stuck where they are, and
right, right.
it didn't pan out. And I appreciate the stuff that Elon is engaged in these days. However, in 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 the past, making comments about all these revolutionary developments in batteries never really materialized, dude. You
Yeah,
know,
I'm seeing
over
trend.
overtake overcharging your battery and to the point where it catches on fire is
Mm.
uh is not a revolutionary concept.
Wow, no, no, no. It's not a good one.
So
That's all we have tonight. What do you what do you think? Rest of 2025, just stock
I
market as a
if
whole.
so let me just end up with this. So again, we'll bring up Ed Dow.
Right.
He a great, a great analyst, a famous analyst. Uh, he he something I really like about Ed, other than he's smart, is he's come on a number of programs and said he did some analysis in 2023 and 2024, and he was wrong. And he actually went back and tried to figure out why he was wrong. First of all, I love it that the fact that he admitted he
Right.
was wrong in his speculation. He has many huge clients. His reports are tens of thousands
Oh
of dollars,
yes,
and he's
yes.
only
And quite
in
lengthy and
pages.
verbose.
So he knows something because he's got a lot of large big dollar clients. And the bottom line is Ed admitted that he was wrong about his projections in 2023 and 2024. B, he went back and analyzed what went wrong with his projections. And that I love that about someone
Oh yeah.
is that essentially tries to a admits they're wrong and tries to figure out how this went wrong. So number three, he is speculating on the fact that there is going to be a recession.
Yes.
um, so maybe stocks have found their area right now and they're going to do nothing. You know, that's
Mhm.
what the projection could be is what if on December 31st we're at exactly where we're at today, man.
Right.
You
Right.
know, on the indexes. So again, we're going to say individual stocks are going to be the place to be because performers will be performers
Right.
and losers will be losers.
Yeah.
So that is my projection. The thought is that you very well could be nowhere. This thing goes into a there is a recession. This thing has already made its major correction, and you get a sideways market to nowhere for
Yeah.
the next
Yeah.
9 months until things bake out a little bit. And so if I was going to say, in my opinion, which is worth nothing, but in my opinion, that is a very real and likely scenario,
Yes. Yes.
in my thought. The thought of it is could it go down a bit more? Yeah, but I think it's really going to be individual stocks go the individual performers who miss um go down more, and the
Right.
people that are winners are going to be winners because they have a solid business model, and maybe those will hold up the indexes to make it a lateral based move. Do I picture that there is going to be some dramatic boom in the next 9 months? That is probably the unlikely scenario. Well,
Right.
I would say my projection, the most likely scenario is a sideways market. Secondary, you could get the indexes going down even further because there is a bit of a deflationary recession, and that hurts companies' profitability. Um, and the most unlikely scenario is you're going to see some boom in the market um, on what has been happening for the last, you know, I won't even say 5 years, the last decade. Close my eyes and throw a dart at the dartboard, and I'm a winner.
Right.
I'm pretty sure, folks, that ain't happening this year.
That,
We'll
no,
see
no,
about
I
next
agree.
year. So,
Yeah, I think I listened to Ed Dowden, read a few of things that he's written, and I think he's dead on. I think we're headed for a recession. I don't think we've seen the bottom. I think the bottom is there's there's more declines ahead. It's going to be pretty rocky, but I think it's short term. I think there's going to be short term. There's going to be short term recession that's going to cause some pretty steep declines in major indexes. To your point, there are companies out there. I mean, there's thousands of companies out there. There are companies that are going to survive this and are going to be recession proof.
yep.
And we've seen this before. And if you can pick those companies and go long term with them, your odds are pretty good that you'll come out ahead for the year. I think this is 2024 was a good year. SPY was up 20%. We could be, to your point, dead even. SPY was dead even, -1 plus 1% for the year. But I think this is all part of the plan. This is all going to produce some real banner years in 2026,
I
2027, and 2028
completely
when the
agree with
dust
that.
settles.
And the bottom line, John, is you say part of the plan. That's the reason I threw in the real estate. There are some people that are speculating, which I think this is great, and people are not going to like what I have to say and this thought pattern, but the market is overpriced and real estate is overpriced. And so, what does that do for the millennials? It makes it a horrible situation for the
Right.
millennials because guess what? There is no ability to speculate and grow your investments and in real estate. So, I would say a correction is needed to get
Yes.
back to these places.
Yes.
And that would be, to your point, exactly to your point, um, great for the longer term where I can get in to the real estate market, I can get into the stock market and see some
Yeah.
appreciation because you can't see that now, and that's a little bit back to the price of gold, which I am a gold bug, and the bottom line is I like physical gold and stuff like that because it's an insurance policy and there's no counterparty risk. But the bottom line is, at this price, man, oh man,
Right.
you you know it's. I'll tell you right now, it's damn near, in my opinion, priced for Armageddon.
Yeah.
So
Yeah.
if you don't see Armageddon, I'm not sure where you go from here other than down. And so
Right.
see.
I just think we haven't seen the true bottom, folks. And folks, this is buying time. This is buying time. You got to buy these Microsoft. You got to buy Google. You got to buy these companies, Nvidia. You got to buy these companies on the dip because they're gonna go up. They got nowhere to go but up.
Long term. Well,
Yeah.
that great, great subject. Thanks for
Yes.
throwing it out, John. And
Yep.
it was enjoyable. I think we went pretty long on this thing. So
I'll wrap it up. You can reach us via email, one for the road podcast at gmail.com. Our soon to be constructed website will be onefortheroad.net. You can like and subscribe us on YouTube. We're on 3 different audio platforms: RSS, Spotify, and Podbean. Uh, Again, great subject. We'll wrap it up here. Like I said, folks, these companies are not going under. I would invest in them. It may be a little bit painful in the short term, but in the long term, this usually works its way out.
yeah, I would agree. Well,
For the
thanks,
One for the
John.
Road podcast, have
Thanks,
a good
folks.
week.
Yep, thanks, folks, for watching. We always appreciate it.
Yep. Have a great
Have a
week.
good